Welcome back again this week. As always, thank you to subscribers, trial members, new subscribers, the whole gamut. I really appreciate you guys tuning in. Boy, do we have a rally on our hands. Green on the screens across the board. Good follow through price action in corn above that 430 level on a close on Thursday here. We had that nice follow through on Friday here. And then you take a look at what's really driving the corn market. It's definitely beans. We're going to hit on that, the technical picture. Obviously, the beans being driven by uncertainty about what Brazil and what Argentina crops are going to be. I think some of that concern is shifting from Brazil maybe a little bit over to Argentina as the maps remain pretty dry for a bulk of that country. But you look at last night's trade. We had that 1208.5 area, which was a high going back multiple years. You really took that out. You had buy stops running above those levels. So to see this price action, not too surprising above 1208. Now the question remains here is, if you look at the options are pricing in, euphoria type movements. If you look at the volatility, we should be expecting 20, 30, some odd cent moves per day based off what some of this pricing is. To me, the option side of things is extremely expensive right now on the call side. And the put side, relatively speaking, looking at the volatility, the puts do present a lot of value, but right now that's a pretty hard sell. A lot of people believe this market's moving much higher, myself included. But let's take a look at the continuous monthly chart of beans here. Now this is continuous, so it's not November. It's front month traded. This is looking at the January contract really at this point. But what I want to really highlight here is, I'm going to put this in yellow. You can see where we really got it back above this, what I would say a trend line, this 2017 trend line higher. You really broke it in November. If you look at December's low, you held that trend line. So this trend line going forward is pretty darn significant here. Now, you did take out, I mentioned that 1208.5 high area, and you ran buy stops here. But you really, not only that, this month and last, you took out the 38% retracement at 1172. So what really does this mean if we get a close, which we did today, above this level right here? I think really this market is going to try to tag somewhere around this $13 at this point. You can see from a technical perspective, there's really nothing right here. This is $15 beans, folks. Now, I don't know if we get there. I think that is really lofty with what I'm seeing out of Brazil. But I want to switch over and look at the weekly chart and tell you exactly why I think we might be headed to this 590 level as a much higher level extension. So if we switch over here and look at the weekly charts, okay, if you notice anything about this weekly chart here, we have a gap in the chart right there. That level right there is right around 1297. Call it 1298. So to me, above that 1208.5, still there's a gap right there, and this market has a bunch of blue skies ahead of it until 1290. Now, what negates this move higher? Weekly chart continues to show support right along that 2017 trend line right here. So long as I think you hold the 20-day exponential moving average, which right now on front month beans looks like it's going to be 1170, let's call it, right around that trend line as well. So as long as we hold 1170, now what would take us a 50-cent pullback? I think if you get some rains, I think if you get cancellations from China, if you see better prospects from weather standpoint out of Argentina, could you get a 50-cent pullback in this market? Absolutely. But as long as you hold the 20-day and hold this trend line wherever it may be at that time, we are going to move higher. So until there is much more certainty about the Brazil crop, about the Argentina crop, right now I think you got to start tagging somewhere along, let's call it anywhere from $12.70 to $13. Now, Do I think we get the 14? Probably not. But is it possible? Yes. Are the calls extremely expensive out there? Absolutely. You could buy a $14 March call for over 9 cents. That's absolutely insane. That's crazy price wise. When I go back to volatility, the volatility has to be through the roof, maintaining daily ranges of 20, 25, 30 cents to the upside to maintain that type of price. If it rains, if volatility starts to come out, and this market does move over, the options are going to get absolutely crushed this far out. So, do I want to lean bullish here? Absolutely. I think until much more is known, I think we got a bullish story on our hands for the foreseeable future, and that comes probably to at least at the year end, probably the beginning of the new year. Obviously, we're going to keep a close eye on the weather down there, and we'll let you know if anything does happen. Let's take a look at the monthly chart of continuous corn. Very, very, very interesting here. I'm going to show you some things that probably is going to excite some of you guys, and hopefully it's all good stuff. But I tell you what, you take a look at where corn has been here, basically since the later parts of 2014. We've basically been range bound. Yes, we got it back above 440 in last year on the planting scare, and but you take a look at that trend line basically from July of 18, and you basically held it, you got back above it, and I really think if you take a look at it just from a larger perspective, kind of where we've been trading and where that trend line means, if you just drew a trend line across that and say just left it there, we haven't really got back above it. We found resistance in October of last year on it, and we have never traded above it. We're getting pretty close to it now, folks. And so, to me, if you can take out this trend line right here somewhere, and I don't know, maybe it's right here. I don't know where. But you definitely could point this thing to $5 over the longer term. Now, initially, you're probably going to go to 450, 460, and probably maybe retest some of these last summer highs. Call it the 450 to 470 area. Very possible, but I want to forewarn guys, we still are looking at, call it a 1.6, call it a 1.7 billion carry out in corn. If you're getting up to those levels and beans don't have a significant move, I think these levels are pretty overvalued right now if the carry out remains the same. That's a big if given the demand structure, but a lot of things can shake up here. But what's going to be very interesting, if we switch over, we take a look at the weekly chart. Weekly chart is very interesting to me. I'm going to draw a trend line here from the highs back in 14. Obviously, a lot of you guys remember 14. We never looked back from it. But we're getting pretty close, I think, for some really encouraging things here. Take a look at where the trend line is. Okay. So 2014 highs right here. You have the 2019 highs here. Here's where we are. This is the weekly chart. Look where we're at. We're right along the trend. We're basically the channel resistance the last 6 years. We're coming up along that trend line resistance from 2018. We're coming up with a downward trend line resistance from 2014, all coinciding at this pretty important area here right around 440. So you break 440, you initially go up, you tag this 2014 trend line. Very possible. I think it does happen maybe later on this summer, given maybe it does happen over the next month or so, a couple months, but I do think it's something maybe likely in the summer months. But I do also think over the next few weeks, if there is problems in Brazil, I think you're going to try to tag it and maybe possibly break that 2018 trend line too. So very, very critical area. We'll call it between 440 and 460. So between that level, if you can get back above anywhere above this 2019 highs, that's your move. That's the move we're looking for right there. You got to take out these resistance levels. These algos will be looking at this. Obviously, the algos are buying the strength here. They're buying the trend. Where you are going to get much more excitement in this market, and something that can stand alone on itself without beans help, you take out the 2019 highs. You take them out on a weekly, you take them out on a monthly, and you got $5 corn. That's a purely technical perspective. So how do you play this if you are a producer right now? New crop corn, stay patient. I'm not recommending any sales right now. Only recommending sales on 10% at $10 cash beans, and that's it. That is it. I want to get started on beans at $10 cash, but that's it. New crop corn, stay patient. Old crop corn, stay patient. If you got March up to 454 to 460, boom, reward it. If you get July corn up to that 460, reward it. Even though you got a maybe potentially higher prices, come scale in the sales here. Be somewhat conservative. Be mindful of where the carryout is in corn, which is not near the bullish story as beans. But the other thing I want to show you is, and I don't want to go too long here, but the purple line right here is the S&P 500. Basically, I'm going back to the 2008 highs here, and so the basically the white bars here, this is the Goldman Sachs Commodity Index. We've been in a resistance and a downward channel, or downward trend, I should say, basically for the last 12 years. We're coming up against that trend line resistance again. You can see it from a technical perspective. Basically, if you get to the fourth time it has tested it, it becomes weaker over time. Ready? 1, 2, 3. Guess where we're coming up to? 4 times now. We're coming up against resistance. We potentially could be entering a bull market for commodities. You break this level right here, boom. And given how much stimulus, money printing that's going on in the system right now, you could be looking at some inflationary pressure. And I think buyers and investors are going to look at assets classes that are undervalued or have been beat up to other asset classes. The purple line was the S&P 500. Let me go back to it. You guys have seen what the S&P 500, if you turn on your news, everyone's talking about how great the stock market is. That's your stock market right there. Look what commodities have done in that same period. Barely up 40%, and equities are up over 200. Commodities are undervalued in my opinion, and so I think we got to be careful with our hedges next year. I think we got to be careful with what kind of strategy we're using right now, but sometimes having no position or little positions is a position, and you got to be patient, reward the market when you got good levels from a cash side or a hedge standpoint. But right now, I got to stay patient on a lot of these grains. Real quick, I don't want to drag this on too much here. Here's the 10-day GFS for Argentina. Obviously, this is the big production areas right here. I think in general, this right here might be leading the story here, headlines about South American dryness. I think it's Argentina's story at this point right now. So anyway, this is all I have for this week. I know I went just a tad bit long, but I'll put some good stuff in the commentary below. Hope everyone has a great weekend, and we'll be in touch next week.